Hello everybody, welcome back to Financial Trading Basics. So I had a couple technical or like administrative things I wanted to talk about today, as well as some more overall economic principles. So first thing I wanted to talk about is actually relevant to trading. As you can see, we have our chart up here behind us. We'll get to that in a second. But I wanted to talk about the responsibility of the dividend if you short shares. So as you can see right here, I'm short 185 shares, down about 550 on this. This is a trade that I will probably hold for at least 6 months. Again, once you enter, it all depends. If I start going up into profit, I immediately start protecting the profit. If I don't go into profit, I've entered a trade at a position size that I can tolerate. And so I said I wasn't going to do any open short positions, but what I did is just pick something that I don't see as very volatile. American Eagle being out of like the big tech trades or tech swings and up at, multi-year highs. So this is the 10-year chart on American Eagle. I just see these type of trades. Why am I confident about something like this as opposed to a tech trade? Obviously, I see these types of stocks as capped of their innovation. Right? American Eagle or any clothing brand, I don't think there's that much innovation to be had. Certainly could be wrong, but you're not going to have the hype and the momentum unless it gets memed. But and any stock can get memed. But that's just kind of my thoughts. Just a cyclical, seasonal kind of trade. Because again, I'm still not really looking for much. All of my real capital is just in fixed income to preserve the principal and get any income that I can. But regardless, so I did sell. I guess I'll just do my portfolio management. We'll stay with the dividend for now. But so point being is this is something that I plan on holding, and it pays out a dividend. So they pay out on the 9th, and I'm not sure if this is the ex-dividend date. And so when you get into dividends, you'll see the ex-dividend date and / record date, which basically if you own the shares or if you're short the shares, that's when it establishes liability for a dividend, either receiving or paying out. And then you actually the pay date. So for like SGov, the ex-dividend date was December 19th, and the payout date I believe is on Wednesday. But just you'll see 3 different dates when you are considering dividends. And so regardless, American Eagle pays a dividend. I'm short. I'm planning on holding this short position through the dividend. So what are my obligations? And so if I'm short 185 shares and for the trade, I won't go over 200 shares before the dividend. After, I probably will, assuming it kind of goes in my favor, does not go up very high past this. But for me to close this at a loss, or certainly up into these range, I could easily very comfortably hold this to 40, and this is like the rebound after the closing and reopening up of COVID. So do I see the sentiment and momentum of American Eagle continuing on? And no, I do not. That is why I'm holding this, and this is pretty much my only trade currently. And so I might talk about the broadening out or the tech trade continuing here in a second. That is not really the point of this video. And so I have this obligation if I hold through the dividend date and I'm short these shares. My question is, why does the person who shorts the share have the dividend responsibility? So the total dollar figure, this is not me saying, oh, I don't want to pay a dividend. But it's kind of, let me 1 second. That light, I didn't realize that light was big and bright behind me. Now I'm running over my microphone cord. But I'm not going to restart the video. Okay, we're back. Yeah, we're back. So what I'm saying is if I am shorting a share, where let's just talk out loud, who's establishing responsibility? So I open up a brokerage account, Charles Schwab, I deposit some money, I've applied for margin, I've approved, so I'm able to sell shares short. And so when you sell a share short, you have the brokerage is lending you that share from somebody else's portfolio. And so when you open up your account, or if you apply for margin, or if you just want your shares available to short, you as the person that's long them, right? Somebody owns American Eagle, and they've gone through this agreement process with Charles Schwab that their shares are available to short. That's how you get this easy to borrow or hard to borrow or none to borrow up here. And I'm assuming that's just at a given brokerage, which I don't even really know why that would need to be. Meaning, I'm pretty sure the only shares that are available to short, the easy to borrow, hard to borrow, or none to borrow, is the shares that are held at Schwab. I don't really know if, from a business to business perspective, if that's good or if we're just increasing liquidity across platforms, what would make sense there. That also popped to mind. But point being is if I short a share, I am making an agreement to the brokerage that I'm going to buy that share back. And I want to be it's specific to the brokerage. Um, and then if I loan out my shares, if I deposit something by American Eagle and say, yep, somebody else can come in and short these shares, that's an agreement from the owner of the share in the brokerage. So the person that's short the share has an agreement with the brokerage, and the person who is long the share has an agreement with the brokerage. And so, but then where does the dividend come from? Right? It comes from the company. And so there's no confusion who has ownership of the shares and who has shorted the shares. So it makes no sense to me why the company can't just pay the dividend directly to the actual shareholder, as opposed to the dividend comes from the company. So the person shorting the share to me makes no sense to have any obligation, because you can easily just have the distribution of that dividend to the original owner, and the liability, the decision, the consent is still with the person short the shares with the brokerage, and the person that allows their shares to be shorted with the brokerage. The company, it doesn't really factor into this at all. And so that makes absolutely no sense to me, as to have the person that's shorting the shares responsible for the dividend payment. Now, for my actual given trade, I have no problem holding this, because the profit margin and risk tolerance, right? If I have 12 cents over 100 shares, that's $12.50. So not going over 200 shares before the dividend, my obligation would only be $25. And so well within the profit. I mean, like I said, I would hold this all the way up until like all-time highs. I just don't see, what I consider, again, and then you can always ask, does cyclicality even make sense, right? What are the overall in this series, what I'm trying to do is find the right economic questions to ask, because when I turn on CNBC and I hear these conversations day in and day out, and there's just no meat on the bone. There's nothing to respond to. Sure, people like to talk about the trades they're making, if they're making money or not making money. That's all fine and good and fantastic, but it's not really meaningful economic discussion. So I'm trying to figure out the questions that make sense to have conversation. And so the dividend for the liability I covered, that doesn't make any sense. And then another thing I wanted to show, technically, much more technical, or I don't say much more technical, but so here's my Schwab breakdown of my balances. I'm here on schwab.com under my balances tab. And so last time I showed you this, I had no open shorts, so I didn't have any. This was a zero, but now this is, again, I'm $5,000 obligated, and that can obviously go up, and it's not capped. In theory, a stock can go to infinity, but I'm not gonna. I wouldn't bet my hat on it, the long position. But point being is, I do have some short value. I have some liability. I'm net or negative $5,000 in terms of I have to cover those shares. And so, technically, what I wanted to talk about today is margin details and buying power. And so I showed you how up here on the realized gain and loss, this chunk right here still makes no sense to me. And we'll get to that here in a second as well. This one's always right on. I mean, this is the accounting statement that makes sense to me. This intermediary disallowed loss we cover, that's kind of, I have really truly no idea what they're, like I can't follow that as an accounting statement. And I'm plenty competent. But, so like I deposited X amount of dollars. It doesn't matter how much money I deposit. I deposit $600,000. And so balance subject to interest, $0, great. Month to date interest owed, $0, great. Margin equity. This makes no sense, right? If I deposit $100 and then I get approved for a margin account, then I can trade 4-to-1, right? I mean, that's typically what I have right here on Schwab. And so for every $1 I deposit, I can trade up to $4. And so I don't actually have that money in there. So that extra $3 that they allow me to trade is margin, right? That's your loan. They're loaning you your money. And if you hold a certain amount, or if it goes negative, you might have to pay interest, right? And that's tallied right here. But point being is, You don't, margin equity is nothing. Like you can't, right? Equity is when you own a share or a portion of a company or of something. Margin is a loan, is leverage. And so when I have margin equity, you don't have equity in margin. And regardless, I deposited this amount of money. And so that is my account balance, that is my net liquidity. Because like my actual portfolio allocation when I'm holding treasury bonds in an ETF is that equity. I mean, if you want to say an ETF is, I guess, but that's ticky tacky. But this makes no sense. Margin is what the money you were loaned. Equity is the amount of proportion of how many shares you own, how much proportion of the company or of the object or whatever you own it. And so when it says equity percent, 100%, it's not exactly true because, right, I have a short balance, which is not equity. And so this is super sloppy. This margin equity straight up makes no sense. Because if I deposit $1 and I invest $1, like these reflect the correct thing, but you're just not saying anything here. And it's like, how do people not read this shit? All of these people that go to Harvard, and it's like nobody says sitting here and saying you don't have equity in margin, and you don't. Like, so this was another thing that made no sense. So we covered the dividend liability, the margin balance, and then another thing we talked about was wash sales. Right, so over here on our realized gains and loss, once again, we have disallowed loss is typically tracking wash sales. But with brokerages, meaning the availability, 24-hour trading, simply having a terminal on your computer, it's all relatively new. And so you have very legitimate times when you just change what you want to do. And it may, like, if you're going in there to tax harvest, if you're going in there to be like, yeah, I'm just going to buy it and sell it I'm going to buy it real quick and then short it again, or I'm at a loss, I'm going to sell it and then buy it back again. But then there's also times when you just have to make that decision and you're pivoting, whether you're reallocating your portfolio, you don't like a given trade, you're in profit, that you're going to buy and sell the same thing and it's not legitimately a wash sale. So I definitely think there's room for improvement on establishing consent and responsibility from a wash sale to a genuine portfolio pivot, given the same amount of immediacy, how quick it is, right? If you buy and sell within the same day, right? Plus or minus 30 days is insanity. So I'm talking, you can have legitimately things that look like wash trades that aren't, that are just market dynamics that you're reacting to, intraday, within seconds or minutes. And so there's got to be a better way to establish who is out there trying to, and the wash sales do exist, meaning you're a direct attempt to avoid taxation is present. But then there's also times when you're just reallocating your portfolio, cutting a trade short, or cutting a stop loss, letting profits go. You're doing some sort of dynamic within that framework that it just makes sense to do stuff really quick. Certainly within plus or minus 30 days. So that's got to change for sure. And those were like the three kind of economic things, or getting more really so trading on here. I was going to try to do economics, but you can't tackle all of economics at once. But I'm just trying to find the right questions to ask. And the first one is, it's like, why do people buy? Like, what just consumers drive the economy? And so the biggest thing of all things economic that are going to change is informed consumers. I made a whole episode about this, right? When you're sitting there and saying, I'm going to try this out, or I'm going to try this out, or any company that's kind of a fad, there's going to be more or less like a standard life cycle of what people consume, what they eat, right? Diet might vary a little bit based on your region, but, poultry, fish, some sort of vegetable, starches, potatoes or rice. So we're going to have a lot more consistency with consumption rates and human behavior in general. Because most people just don't know what they need, what they want, and there's like, that's definitely going to be the biggest thing to change consumer behavior. And then past that, right, why is the S&P 500, right? Why does that mean anything? People say the S&P 500 went up 7% today. Again, that's like a very transient, or not transient, but a reflective of population numbers increasing. But does Does the S&P, does the stock market reflect the economy? Does it matter? Again, what is the economy? Is it one person being unemployed? Is it one person making $1 million as opposed to $100,000? Is it, again, what questions are we trying to ask? And so I'm probably not going to dive that into today, but that's what I want this, for me, what I want to develop into way past, do I make X amount of dollars on a given trade? But just trying to figure out what questions make sense. Certainly, it's the consumer behavior, consumer behavior drives stock, the entirety of economy, but there's just gaps of knowledge where you can ask more meaningful questions, and it just skimmed over. Like every time I listen to somebody on CNBC, they're not even like asking or demonstrating awareness of the things you would have to consider to make certain statements. And they are out there. Again, I just don't spend my time doing this that much. But regardless, I wanted to cover the margin balance, dividend liability, and then wash sales again. So my actual portfolio construction, I cut my losses on the weekly pairs. I had WPay, which again, I told you this was leveraged, which I'm okay with that. Just we got to use our buzzword, our NAV, our net asset value. This decreases just because when I'm looking at this before I bought it, it's like, oh, it's pretty flat. That's pretty cool. And then, oh, we're going down. No, we're just keep going down. And so like I gathered, I think it was about $800 of dividends and lost about $1,800 in principal. So down about $1,000, cut my losses there. Same thing with ULTY. Overall, whatever my dividends in were, $500, $600, the net value loss was about, half of that, or the income was half of the net loss. So down probably about $1,600 on these. So I just cut my losses here and moved on. So I kept that in cash. My SGov position is not going to change at all. I don't have any expectation to have enough principal to generate a meaningful investment income off the the 20 some odd thousand I have here. Again, less. I have to cover about $5,000 worth of American Eagle, assuming it doesn't go up anymore, which it could. On American Eagle, this one, like I said, realistically, all-time highs is $38. But here, earnings the past 2 weeks, this is, I can't see this not retracing about now, but $30 was the other big thing. The only time it's ever traded above $30 was the reopening of COVID. I'm gonna hold my hand here. But this is my only really trade for the next little bit. And so my thing is like, okay, can I take one trade, assume a little bit more risk, and then effectively, again, simply not buying WPay and ULTY would have been a better, net outcome. But you got to try some stuff out. And so the QQI and the SPY, those have held well. So I might just put those in there where you get, 7 to 12%, depending on the different underlyings. But point being is it just, simply not owning the weeklies with the erosion of the principal was more beneficial. But can I, whatever income I was trying to generate, another $400 or $500 a month, can I do that with a single trade? And I think so. And so we'll find out. The point being is that's my minor reallocation. Overall on the market, I'm just kind of like, I don't think there's been a correction. I don't know if there's going to be one. I'm over here short of, is there going, without acknowledgement of my work publicly, I just think it's going to trade as it normally trades. And if it does get publication of my work, then I'm not going to be worried about this shit whatsoever. I'm already not worried about it. It's just, I want to do real business, man. But point being is I do think there'll be, I would say this is a complacency. People are all kind of like, oh yeah, the tech trade's going to continue, and I do think it's going to continue, but it's just genuine business development takes so long. And so I 100% think, I don't even think this right here, right, whenever this was, I can't see. Let's see. Move my cute face out of the screen a little bit. This over here from 689 on the SPY, so late October up till about, end of November. So pretty much all of November. I don't even see that as anything. Because the S&P 500 is so heavily weighted. It's still just like a tech indice. And so I wanted to get into more discussion on the S&P. Does the construction make sense? Do I think it's reflective? But I'm just going to think and prepare some more questions before we get into that. So that is what I wanted to cover today. Thank you for watching, and I will see you on the next one.